Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. This week I also have 4 trade ideas to share with you towards the end of the video, so stay tuned. First things first, let's jump into the S&P analysis by starting off with our sectors as we always do. Who was leading, who was losing, and where was the weight? The utility sector certainly led the pack today, up about 1.79%, whereas energy led to the downside, down 1.25%. As we know though, neither of these two sectors make up a significant weighting inside of the S&P, although it is interesting that utilities are generally seen as more of a risk-off asset class. It's noteworthy that they were up at the top, but where's the weight in general? Of course, we're looking at the XLK for the tech sector, down about 3.8%, XLF for the financial sector, down about 0.25%, and the XLV down about 4 basis points. So overall, no surprise that the market had a slight red day, as the majority and the heaviest weighted sectors certainly had a down day. Let's check in on some of those charts and just make sure that risk isn't mounting in one place versus another. I would say the XLK continues to look fine. As a matter of fact, I would even read into today's structure a little bit more and simply say that the hammer candle here is actually a good sign. If the sellers were going to grab a foothold, it should have come from underneath the low end of balance at 158.30. You can certainly see this lower wick pierced it, but the buyers responded by taking it back up into balance, thus showing that, sellers, quite frankly, are weak, right? If they were going to materialize here, it should have happened underneath that level. So now looking for the new higher high to form up and over the top of balance. Let's call that over 160 for round numbers sake, thus preserving the daily uptrend and then affording the new area to pull back, keeping the market grind going higher. As long as we hold on to, again, that 158.30 on any, subsequent tests here, I would say things are fine inside of the XLK. Let's take a look at the XLF now for the financial sector. And zooming in a bit here, what you can see is a little bit more of a different picture, obviously rolling over from the highs more recently up here a little aggressively. But again, I would encourage you to just think about what today's session represents versus the prior sessions, right? If you look at today's structure, certainly more of a question mark indecision candle as opposed to those stronger sell side conviction candles that were happening prior. So again, not the end of the world. The worst case scenario, or what we would want to see as a worst case scenario, would be an equal low down here at 37.21. But if this is going to start to signal a potential reversal, again, it doesn't have to happen here, but if it does, then that would be, again, a higher low, right? If you do something like this, that would be your higher low, would be looking for an equal high at minimum up here. Otherwise, we'd really be in just a period of consolidation and tightening, really, in the financial sector. I don't really think anything too aggressive is going to happen here until there's more news from the Fed about financial and monetary policy. Speaking of which, let's take a quick look at the TNX for the 10-year note and just talk about what's been happening here. So a gap up on Tuesday actually looked like it could have taken out this 1375 area and had rates running back towards 15. However, on today's session clearly backed off and are still contained well within this overall chop zone here. Again, I don't really think there's too much to read into until we get over 15 or underneath 12. As you know, the relationship here is if we go higher in the TNX, that's going to bode well for the financials and poorly for tech. And if we go lower, it's the inverse, so poorly for financials and better off for tech. That's what you just watch out for. But again, 15 and 12 really being the inflection points to be primarily concerned with. Next up, we'll head on over to our sectors once again, the XLV, to wrap it up, the third heaviest weighted sector. And what you'll notice about this is certainly some more consolidation well within this overall range here. But if we subdivide this once again based on prior resistance, right in here, now acting as support, that's more bullish than bearish, of course. So still looking for the breakout up and over that 136.84. If we do get that, that would preserve the daily uptrend again, affording us the chance for a pullback into a higher low. As it sits, as long as we respect this number right here at 133.75, I would say things are all fine here inside of the XLV. And that's going to kind of wrap up the sector analysis. And as you can see, one sector versus another isn't really screaming that there's a whole lot of risk out there at this given time, or at least that we can see, right? Let's take a look now at volatility, looking through the VIX as the first lens, and then I want to take a look at the VVIX. And what you'll notice about this is certainly there was an uptick on that little morning panic that we saw, but we never got over that 2050 mark, which, as we know, is kind of the gatekeeper for a larger downdraft to develop inside of the marketplace. So until we get over that, I wouldn't be overly concerned, but also just remember that we never really spent too much time down here in complacency zone. So it's not like people are all of a sudden being caught off guard as they would have been, again, if we did get back down into that 15 floor. So VIX, not screaming that the market's going to crash or anything like that, but certainly an uptick inside of volatility on today's session. Also looking sort of one step further at the VVIX, VIX for the volatility of the volatility index. And what I want to do is just compare two scenarios for you. The first one is this. Obviously, this is today's session. And the last time something similar happened, to gap up, right, off of a floor from in here, was back here. Now, there's a little backing off before it went higher, but what I want to point out is that this candle right here, if I clean up this drawing, you can see did come over our line in the sand at 120. Today, we never got over 120. Now, I'm not saying that this can't do something like this as well and sort of repeat what's happened in the past, but I just don't think it's as significant as that time right there. Again, remembering that 120 is kind of, when you peel back the curtain, if we're above 120, it's kind of like, okay, get ready for a big move in the VIX, right? And it certainly has not come into play just yet. Again, not saying that it can't come into play, but as of right now, it's not something that I'm overly concerned with in terms of volatility analysis. Let's go back over to our S&P and talk about tradable levels into the remainder of the week. If you're not familiar with this red box, let me zoom the chart out and just briefly explain it. If you want a more in-depth explanation, check out the video from Sunday. But look at this certain rhythm of the market. We're basically expecting that the red box could contain the timing, essentially, of where the next pullback could develop. Looks like we're starting to do that today. But let's talk about that a little bit further. That's just where the box is coming from. What I think is interesting about today's activity is the fact that we had a look below and fail, or the potential for a look below and fail. And I actually tried to play it here, got stopped out. Regardless, I think it's a very low confidence market, the fact that we closed right at the low end of the balance. So I would really be patient and see how this number right here, this 450.75, resolves before getting aggressive to the upside for that look below and fail, or to see if this is just a little back test and we roll over from here. When we look at the internal screen in just a second, we'll talk about a very black or white thing you can watch for to monitor for that. But obviously to the upside, the top end of balance is here at 453. After that, blue sky territories, $1.50 intraday levels that do form. And to the downside, now obviously with today's low in place, we should be keeping an eye on 449. And after that, the 447. I do think if we do something like this, so roll over back to here, today's low, and it breaks, that would likely set up the scenario where 447 does break, and then that opens the door to this gap underneath. Just scenarios for now, and again, as we get into the internals right now, I'll give you that black and white area to watch. So if you're not familiar with this screen, go ahead and get familiar by looking at the video in the top right-hand corner. It's going to tell you what this is, how you can set it up, and how it'll help you make better trading decisions. Regardless, getting into the breadth first, you can certainly see that we never came into that minus 300 million mark. I do acknowledge that, again, it's a holiday weekend, but the volume in the marketplace, it's simply not there, right? So that's being proved by, by the breadth. And then if we look at the advanced decliners, no surprise here that it was negative. We did have 2 down days on Tuesday and today, Wednesday. So, all things fine. They check out there. And then in terms of the tick, right, what's going on with that? Certainly confirming as well that downside activity was in store. So nothing really jumping off the page or screaming, hey, look at me, I'm a divergence. It's fine, really. Everything's going status quo from an internals perspective. In terms of that black and white area that I said you could keep an eye on, if we just expand our futures screen here, take a look at this resistance trend line, right? If we do something like this, and then a secondary from this pivot high from yesterday, sort of coinciding and aligning nicely with those overnight highs, this is simply, again, the black and white thing to watch. If we get acceptance back above that resistance trend line, fine, look for the look below and fail scenario. But if we roll over here into the extended hours session, then, we're kind of going to be on more of a breakdown from that low end of balance. So that's what I would watch out for. They're very similar to one another. They could be coming into play overnight. Keep an eye on it. As of right now, depending on when this happens, could be anywhere from 45.15 down to about, let's call it 45.07, right? Depending on if that happens very close to the bell when these are extended down here and we get into it in the extended hours session. So that's what I would encourage you to watch. Let's go on over to our market profile now, talk some nuance. If you're not familiar with this screen, again, I have another video for you, top right-hand corner. Go ahead and watch that. It'll explain what this all is and, what some of the terms that I'm about to use are. The one thing that I think is going to help guide you in terms of, figuring out if it's a look below and fail or a true breakdown is what's happening with value, right? I think it's really interesting that on the overnight session, in between Tuesday and Wednesday here, that we actually tried to break down, but you'll notice, obviously, that value, this highlighted yellow area here, was contained in the prior day's range. So it really wasn't like value was breakaway to the downside. And the same thing holds true for today, right? Clearly, we had that aggressive move to the downside early on in the morning. We spent some time down here briefly, but where's value on the day, right? You can clearly see that it's here. and more overlapping with our prior sessions as opposed to breakaway to the downside. So that's why I think it's kind of a low confidence market here at the bottom end of the balance. You can see into the overnight session, we're testing that low here, which is the low end of balance, essentially that 45.12, 45.10-ish area inside of the ES. And it's one of these things where I think you should probably wait for more information at this point in time, because the early scenario didn't play out and the late day scenario also did not play out to the downside. So kind of a question mark on how this area, literally right here at the point of control, will resolve into the end of the week. We have good excess at the highs, good excess at the lows, not reading into that too much. There's no poor lows to talk about. Again, it's really going to come down to what's going on with value. Is it progressively getting lower? Are we struggling to get value lower? Can we go more sideways, or is it going to be breakaway to the upside? Those are the questions to watch. And as of right now, again, I would just say that the sellers, they're quite frankly not doing the best job, right? Value, again, is very overlapping to slightly down here inside of the profile. Let's get back on over to the main platform, talk about the Qs, and then we'll get into those 4 trade ideas I'm sure everyone wants to hear. Just like the XLK, again, same thing with the hammer candle here. If sellers were going to materialize, should have happened underneath that 379. Did not come. The other thing I want to point out is just the divergence between where the Qs are in terms of their balance area here and then what we just saw in the S&Ps, right? The S&Ps had already broken fake break, whereas the Qs remained inside at all points during the day. So that divergence there, I don't think that the SPY is going to sink without the Qs going with it, and clearly they are being supported by the low end of the balance. The last thing I'll say in terms of sectors and sort of, intermarket play is if you look at the percent change from the open, the S&Ps are really only going to sink when all of these things are red. Not just our heaviest weighted sectors, but kind of all of them have to be red if the market's going to see a major correction to the downside, and it just simply wasn't the case at any point in time during today's trading activity. So back over to the Qs, talking more about levels and what we can watch for. If we do get a breakdown here, looking at that 376 quarter, and then after that, that 373 area, nothing's changed from that perspective. If we get the break up and over highs, then you're looking for a range double, right? And just to give you a target here, doing something like this, just for a quick visual, you're looking at about 386 to the upside as a first target here in the Qs on any sort of breakout. Next up, we'll check in on the IWM, Russell 2000, and our small caps, and nothing has really changed here either. Remember that we did have a very impressive run. There is a gap underneath, but, it's no surprise there was some sort of pullback. Ideally, we would have made it to the top of the range, pulled back, and then seen that, but all things considered, we have to deal with what we're given. So the fact that we have this now sets up the opportunity for a leg higher if we get the break back up and over 227. In that case, if we get to the top of the range, you're looking for the higher low, and then the breakout to signal some more aggressive risk on inside of the marketplace. But as this fades back into the middle, right, let's talk about what's right in front of us in terms, not so much speculation. As this moves back into the middle of the range being defined by this overall area here, it's still just signaling neutral risk, right? We did not get to the point where we have aggressive risk to the upside. Let's try that again here. And we're still not signaling, aggressive risk off outside to the downside of our balance area around 208. So again, just more monitoring. If you've got them, keep them. If you don't have them, probably not the time to be chasing new longs inside of the broad market. Let's now get into those trade ideas. First one's going to be on DIS for Disney, of course. And if we just look at this chart, very clear breakout level has formed right around this 186.35 up to approximately that 187.28, right? So treat this as more of a range. You can see these upper wicks in recent history, but if we can get a break there, I would argue there's some room to run. Looking left, the next pivot is really up here around 191.50. Certainly the inverted hammer from today's session would lead me to believe that maybe there's a little bit of a pullback, another higher low, one more test, and that's where I would really look for the breakout. You can see, a very short-term support trend line could be drawn in something like that. Maybe the higher low comes around 183, somewhere in that area, but just keep an eye on the breakout area here. I would probably set some alerts as we move forward into the remainder of the week and going forward. Not so interested if it takes out that support trend line. And again, you could draw that in something like this. It's quite steep, but again, I want to see the momentum remain strong here, get the break of that area without a major pullback. Next up, we're going to look at MO for Altria, and this is simply a daily bull flag, right? If we zoom in here, you can see that we've consolidated nicely for a couple of days now. Let's grab the other tool and try that again. So a couple days of consolidation, 3 days after the breakout higher from here. And as long as we hold up above that 50-50, looking for the breakout of 51 to take us into, looking left, it's going to coincide the breakout area here. So the next major target would be all-time highs up around 52.59, which are also acting as a pressure cooker top. You can see 3 equal touches and then another one where this massive breakdown came from. But if tested again, I would imagine that we see a breakout up and over that area, not only because it's all-time highs, but because of the structure that we had from back in here. Again, not interested if we take out the bull flag lows and trade underneath 50-50. Next up, we're going to take a look at NEE, and I don't know how to say this one, Nextera Energy, we'll call it, Next Era. I don't know if it's one word, two words, whatever. But again, same thing, sort of a breakout point up here. Energy has been doing well as the market has sort of been in a slump. And again, today is not really proving my point there. But energy has been doing well over the recent term. So looking at this as a bull flag, right? If we can get the breakout up and over 86.48, I do believe that we can make a move into the all-time high here, 87.69, and then potentially much higher from there. So keeping an eye on this one. Ideally, there's two ways to play it. I probably wouldn't take the break here at 86.48. Just because resistance is so close overhead, but watching for consolidation here maybe, and then a larger break up and over the all-time highs if that scenario does end up playing out. And then the last trade idea is on good old PENN. We've been watching this one for some time. We got the break of this initial area in here, and now yet again another bull flag. Now it's not the cleanest simply because it's kind of trending higher. Usually you want to see these things going perfectly sideways or slightly lower actually. So again, not the most beautiful pattern. However, still noting that it's consolidating above prior breakout points inside of this activity here. If we get the break of 85.25, then you're looking for the next left-hand target, which I would argue is kind of up here, splitting the difference between this low and that pivot high in there, around 96.11. Keep in mind, though, that this green line here, the 200 SMA from the daily perspective, will provide a bump in the road. I wouldn't imagine that it gets there smoothly, all in one go. But again, remembering that there's some pretty solid momentum here. If the break does happen, I could see something like that developing over maybe 1, 2, 3 days, something of that sort. So those are the trade ideas. I hope you enjoyed them. If you did, let me know down below in the comments section or by giving the video a thumbs up. And all of that being said, really, I wish you all a green trading week.